Hello and welcome to Startup Street. I'm Arundhati Ramlin, and with me are Shruti Mishra and Ritu Singh. These are the top headlines from the startup world. Tech firms resort to more layoffs. Facebook parent Meta likely to begin fresh round of job cuts it had announced in March. This after firing 11,000 employees in November. Amazon lets go of several employees in its advertising unit as a part of the 9,000 job cuts announced earlier this year.
BNPL startup Simple lays off nearly 25% of its workforce, which is 150 to 200 staff, say sources to CNBC-TV18. The layoffs were announced to employees in an email sent by the company and CEO, founder Nitya Sharma. In a statement to CNBC-TV18, Simple says the cost-cutting measures were taken in lieu of the current economic conditions and towards becoming a leaner and more agile firm.
Zomato says the recent disruption in its quick commerce unit Blinkit caused no material impact on the financial performance, with a hit of less than 1% in revenue. In a stock exchange filing, the food tech giant added most of the stores have now resumed operations.
Netflix reports a mixed bag. Revenue slips below expectations while earnings per share meet street. The OTT giant's India engagement grew 30% year-on-year. Netflix had cut its subscription prices for India audience by 20 to 60% in December of 2021.
Disney plans to cut thousands of jobs next week, including about 15% of the staff in its entertainment division, says Bloomberg News. The cuts will span TV, film, theme parks and corporate positions and affect every region where Disney operates. Those were the headlines that we're tracking for you this evening on What's Brewing. Meta employees are staring at layoffs Wednesday. The tech major is expected to commence another round of company-wide layoffs today in what is a drive to downsize and restructure teams to achieve greater efficiency. Now, the company's founder, Mark Zuckerberg, had announced that Meta would cut about 10,000 jobs in the coming months and close another 5,000 open positions that it hadn't filled yet. As per reports by international publications like the Washington Post and Vox, Meta will begin the layoffs starting today across its technical teams, including those working on Facebook, Instagram, Reality Labs and WhatsApp. This comes months after Meta laid off about 11,000 employees, or 13% of its workforce, in November of last year.
Well, e-commerce giant Amazon is also consolidating its workforce further to reduce costs. The company has fired several employees from its advertisement team in a fresh round of layoffs. Now, this is part of the 9,000 job cuts which Amazon had announced in March. It had already fired 18,000 employees in November and January. Now, these come amid the company's efforts to rein in costs.
Well, Disney too plans to hand out pink slips. Disney is expected to lay off thousands of employees starting next week, including 15% from the entertainment division. As per Bloomberg, the layoffs will affect those working in the TV and film business, as well as those at theme parks, corporate positions. The company cut 7,000 jobs in March as part of cost-cutting measures.
Or buy now, pay later fintech Simple has announced layoffs as well. Sources have told us it fired around 150 people, which is about 25% of the workforce. Now, in a letter to its employees, which CNBC-TV18 saw a copy of, its founder and CEO Nitya Sharma said the startup had to take corrective action as it overhired during the pandemic and was now faced with slowing e-commerce growth.
And in Earnings Corner, Netflix reported a mixed bag this quarter. The company's revenue slipped below expectations to $8.16 billion, while earnings per share met street estimates. Subscriber base grew to 1.7 million from January to March. The OTT giant's India engagement grew 30% year-on-year after the company announced a cut in its subscription prices for India audience by 20 to 60% in December of 2021.
All right, moving on. Cutting-edge vision AI company SwitchOn has secured Series A funding of $4.2 million, led by a Singapore-based fund, Axelor Ventures, Pi Ventures, and prominent angels such as Anuj Bihani, Lakshmi Narayan, and others. Now, this investment will allow SwitchOn to continue its rapid growth in India as well and scale internationally. Joining us now to talk about SwitchOn's growth plans is its co-founder, Anirudh Banerjee. Also joining us is my colleague, Ritu. Anirudh, welcome to Startup Street. Tell me how you plan to use this $4.2 billion in funding that you've secured. You want to use the capital to scale growth, scale internationally, like I just mentioned, and also invest in R&D. What are the plans on this front? And if you could also share some timelines.
Yeah, absolutely. Thank you so much for having me here. And it gives me, great pleasure to be able to say that we at Switch On are building a global company. We are automating quality inspection for the manufacturing industry. And bulk of this will be used to do more product development as we move from just an inspection to be able to root cause defects in manufacturing lines. We are also expanding internationally, especially in the US, where we are looking to, within a quarter or so, start our foothold and do a lot of more business than we currently are doing. We are also looking to aggressively grow in India. We presently have customers in large Fortune 100, Fortune 500 companies. We are looking to grow our installations there.
Well, Anirudh, hi, this is Ritu. You said US, you have a presence, of course, and you want to expand there. When you say you have international expansion plans, is that only concentrated in the US? And if yes, what is your current base and how much are you planning to grow that by over there?
Yeah, absolutely. So presently, we are in a couple of customers in the US, which we are looking to grow at least tenfold. We have, for example, we are working in the automotive industry. We are also looking to get to the consumer goods industry there. And part of the reason of that is that quality inspection and defects, the cost of quality there is almost 6 times what is being spent in India presently. And we believe that as a company, we can add a lot more value as we go to and aim for customers there.
Okay. Anirudh, like you just mentioned, you currently work across automotive, consumer goods and pharmaceutical industries as well. So tell us a bit about how you use AI to help them reduce manufacturing defects and improve quality. Also, are there other industries that you're exploring?
Yeah, absolutely. I think if you imagine manufacturing lines as they exist right now, basically, while most of the manufacturing itself is completely automated, but the QA/QC processes that they have are predominantly manual, right? So if you imagine, for example, any of the bottles that get manufactured right now, they're manufactured in an automated fashion in these assembly lines. And there are manual operators that go to the end of the line, pick up a product, and try to figure out whether there's a defect and put them in a good or a bad bin. This is a very slow, extremely error-prone and repetitive process. And this is what we are looking to automate with the use of AI and computer vision, right? So what we are doing is that with the use of AI and computer vision, we are analyzing products automatically as high speed as around 600 products per minute, which is roughly 10 products per second, right? And we are figuring out all of the defects in that, and we are removing the products from the line as well, such that after installing our platform in any manufacturing lines, our customers can get 100% quality assurance on every single product that they manufacture. Also, along with that, they get a 30 to 50% reduction in the quality costs that they typically incur. We've also been able to enable a lot of the operators to move away from the slow and repetitive task of going to a line, picking up a product, putting it in a bin, to be able to root cause them through a completely digital platform. So that's a little bit about what we do and how we are adding value.
Well, Anirudh, thanks for pointing that out. And I was also reading in your press note that, companies spend more than 25% of their workforce on these quality inspection checks that you were talking about. And they still get many complaints each year, and they spend more than $6.5 billion. So in numbers, if you could tell us, how much are you able to reduce this cost for the companies that you're working with? And number two, as Shruti asked you earlier, besides these 3 industries, will there be other industries that you would enter?
Yeah, absolutely. So in most of our cases, we have been able to completely automate the quality inspection. So instead of people being on the line, they are just analyzing the reports, which enables our customers to reduce their quality costs by 30 to 50% in most cases, right? So that's kind of the value we are adding for them. In terms of numbers, if you see that typically the quality inspection is about 25% of the total operating cost of a plant, right? And that leads to about a very good 10 to 15% reduction in that bottom line. From an industry perspective, as you mentioned, that we are currently in the automotive, consumer goods and pharma industry. We are also evaluating the electronics and white goods industry as we speak. Right? Quality checks, are also extremely important for any kind of issues that can lead to large-scale problems.
Anirudh, can you hear us?
I can hear you.
My next question to you was that, over the last 4 years, you've worked with several Fortune 500 customers globally. So tell us, how many customers do you currently have? And also, if you could take us through the current business growth numbers and the revenue numbers.
Yeah, absolutely. So I think from a customer perspective, as I mentioned, we work with a number of large Fortune 100, Fortune 500 companies. Overall, presently, we work with about 20 enterprises in India as well as in the US. In terms of the revenue growth, we have seen about a 4x growth in our ARR numbers in this financial year. And we are close to a $1.5 million ARR presently. We are looking to grow this 10 times in this financial year. We have a bunch of large global contracts, with manufacturers that we are looking to execute in this and grow this to a 10x figure by the next financial year.
Well, Anirudh, thank you very much. 10x growth in the next few years, that's a significant milestone for you to achieve. Pleasure speaking to you here on Startup Street, and thank you very much for your time.
All right, moving on. Office Banao, a workspace interiors platform that is transforming the entire office development experience using technology, recently raised $6 million in seed funding from Lightspeed. Now, the startup boasts of an end-to-end solution across stages of design, procurement, and execution, and aims to leverage the capital and partnership to strengthen its platform across both technology and teams, specifically in design and growth capabilities. To talk to us about the road ahead, joining me now is its founder and CEO, Tushar Mittal. Also joining us is my colleague Arundhati. Tushar, welcome to Startup Street. Now, you claim that designs that would previously take about 3 weeks can now be done in a day with Office Banao's interactive visual design process. So tell us how you're transforming workspaces using technology and how efficient is the whole process in terms of costs and budgets as well. Tushar, you're on mute. Can you unmute yourself, please?
Thank you, Shruti, for getting me on this, show. So first of all, I would say, we are here using AI and, gaming into design, so we can have a better and faster process of design. And now this AI is globally, talked about, like how, the models are helped, the complete, data modeling and complete design process. So we are using AI and as well as the gaming as a backbone of our engine. And in this case, like any office, like, if we say any conference room or meeting room or offices, like, club of, different areas, which is globally like same, almost same. So what we generally do that we have made each and every component of the office is like a data structure, and the data structure has multiple options. So generally, in this sector, architects or the conventional players were taking 15 to 20 days of time, which we can very fast and very easily can squeeze to 1 or 1.5 days. And customer not only get a faster design and multiple choices and in a very less time. And as it is a platform, we are aggregating a lot of suppliers and furniture suppliers and contractors, and where we are facing the customers, we are taking the responsibility and complete customer experience as our responsibility.
Right.
And the customer get a better price also.
Yeah. So you're able to do it in 1.5 days and you give better prices to your customers. Hi, Tushar, Arundhati here. You say you want to leverage the funds that you've raised to strengthen your platform. So can you elaborate how? Take us through the fund allocation plans.
So very clearly, we have a roadmap that we want to use this fund for product, technology, and team. So product means like in this industry, there are like lakhs of architects and contractors are available in the market, but every time it is being done by Excel sheet or CAD files and the information and data is unstructured. It is very much distributed, but not organized. So in our case, like we want to have the customer experience from giving the requirement, what kind of office he need, what kind of requirements, kind of how many meeting rooms or conference room or and colors, combination, everything has to be like a product. Like, so they can select from a catalog. It is an online catalog, and that the catalog or selection can be converted into the cost. So that looks very simple to hear, but it has to be a very large, defined product. So team is working to make this product as a very scalable product. And same time, team is very important, from designers to technology team to project managers, and kind of a different layer of HR. In this particular sector, Shruti, if you see that boutique firms are working and they don't have that kind of access to resources, and they are not able to afford that big size team, those who can scale and create a global product. So that's how our first focus is to get the best talent for this Office Banao in all sectors, technology or design. So that is.
So Tushar, we're running out of time. So if you could just tell us quickly, it's a fairly competitive space that you're in. How do you view the landscape, and also if you could take us to the business growth numbers and the demand that you're currently seeing?
So demand is enough, Shruti. Demand is already there. It is how you convert the demand into a lead or a kind of project. That is very difficult. So that's how most of the people struggle, and then every lead to convert it into a project, it takes like a 1 month time, a complete whole cycle. So by this technology and product, we can really squeeze that. So demand is not a problem, but it's as you rightly said, it's a very competitive space. But being a competitive space doesn't mean that the new innovation or better offering will also have the same challenges. We are right now facing the challenge how to get team and technology to cater the demand. Our challenges are different. We have enough demand, but we need to convert that demand into a complete supply. So we are India-wide in different markets. We are signing up with the different suppliers, different contractors, and different service providers. So we can enhance their productivity. We can give them a consistent data structure so that demand can be catered.
All right. Tushar, can you also tell us the size of the projects that you work on? And also, it's only been a year that you've been in operation. So where is this demand coming from? Is it just the metros or even from tier 2 cities, considering you work with a lot of MSMEs?
So interesting is that, right now we are getting 80% of our demand coming from, digital. And in digital, interesting is that it is more than 50% is coming from tier 2 cities. Like clients are calling from Nagpur, like there is a client matrix, and we are getting clients from, kind of Aurangabad and, Jaipur. There are interestingly, their aspirations are very high. India is a growing MSME market, a startup market, and in different cities where the industrial towns are there, they are willing to make their offices like Sonipat is like few projects. One project we have completed in Sonipat. One project we have recently completed in Jamshedpur, Indore. So our growth plan is like in 25 cities we have Office Banao, design centers and people, so they can cater those growing companies, support with the great design and great delivery process.
All right, Tushar, we're completely out of time on the show, but thank you so much for joining us on Startup Street.
Thank you very much.
All right, on that note, we're going to take a break, but don't go anywhere, because when we come back, there's a special report on Resha Mandi, which is a startup which is digitizing India's silk supply chain and has hit 2,000 crores in revenues. So stay tuned for that.
Yes. Quiet! It's okay for us to nod for everything, because we are parrots. But your wealth manager? Shouldn't be doing that. You know? No? Oh.
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Pull up the fix and I take it on gear. Pull up the hands and the feeling more clear. I dig on. I sick on. Take it on the roll and the show and the pull up the face and the
Volkswagen Virtus, German engineered for unmatched safety.
How should organizations manage risk in these uncertain times?
Readiness, which is basically the preparedness for handling an event. Second is responsiveness. If an event happens, how do you respond to it? And third is relief, reconstruction, recovery, whatever you call it.
Catch the curtain raiser episode of India Risk Management Awards at this time.
Z-Block Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
कैसे करते हैं ट्रेड? Try 5 पैसा. Powerful charts and research tool. One click trade is the new cool. Get access to live market data. Margin funding भी है रे बेटा. 5 पैसा app करो install. Trading made simple, simple for all. With 5 पैसा's wide range of products. यहाँ वहाँ चाहे हो जहाँ. Simply trade on the go. ऐसे करते हैं trade. सोच मत छोटे, install मार. Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. You're still with us on Startup Street. In just 3 years, a startup that is digitizing India's silk supply chain has hit 2,000 crore rupees in revenue. Not only that, the farm-to-fashion startup also claims to have achieved operational profitability in FY23. Now, the startup we're talking about is Resha Mandi, and my colleague Akhil Vishwanath brings you the story of the textile tech startup. Take a look.
Every product has a humble beginning. In the case of a silk sari, it begins in a cocoon. But that's where the problem starts. In the traditional supply chain, every batch of silk fiber passes through 15 to 20 middlemen, from the gates of a sericulture farm, through yarns and weaving machines, until it reaches the retailer as a finished product. This leads to price disparity, poor quality, and persistent delays. But solving this problem for India, the world's second largest silk producer is Resha Mandi. The farm-to-fashion startup is digitizing and streamlining India's $150 billion natural fiber supply chain. How? With a super app.
So once we landed up at farmer's place with an IoT device of our own, and we said this will save 70% of your water consumption on the field. The farmer did not believe it. But eventually they saw the benefits of these IoTs, the water reduction happened, the quality of mulberry was same, all those things, and then they latched on to the technology that we were providing them. Similarly, if I have to go up the value chain, if I go to weavers, we went to them and told them, your catalog can be automated. You don't need to send it on WhatsApp. You lay a sari, you click photos, and then you send it on WhatsApp. Don't do that. What we'll do is you lay the sari, you click a photo, we will drape it automatically using AI. Initially, they were apprehensive about it, how it will look, how it will not look. Now the pallu looks right and everything looks proper, and they are astonished by it. Now, if I go to the last leg of my value chain where retailers are there, so earlier we used to tell them, you should buy pink, you should buy pastels, Chandni Chowk mein yahi bik raha hai, South X mein yahi chal rahe hain colors. They did not used to believe it. Now, when that dissemination of forecast and trends with all the data backing they see on the app and who near their shop is buying similar colors and increasing their revenue and they are getting left behind, they get latched on.
Resha Mandi currently works with more than 1,25,000 farmers, more than 9,000 yarn manufacturers, approximately 10,000 weaver and textile mills, and more than 20,000 retailers across India. The textile tech startup also works with several global brands.
What kind of entices them to work with us is because we think about their balance sheets. Now, when I'm talking about the balance sheet of a farmer who's a silk farmer for that matter, assuming he is buying the input from us and selling the output to us, he saves approximately around 20 rupees per kg, while a yarn manufacturer makes approximately around 2.5% more in terms of the profits. At the end, when it goes to the retailer, he makes and there are retailers, and I can give you examples of these retailers who have seen a 1.5x increase in their revenues and turnovers, and more than that. In our case, we make a margin in any of the transactions. So it could be the input that we sell to a farmer, it could be the output that we buy from the farmer and finally sell it to a yarn manufacturer, or a sari that moves from Banarasi weaver to finally a Delhi retailer. again, there is a margin that we kind of make in each of these different transactions that happen. Apart from this, when we are looking at supporting them through finances, basically in collaboration with our NBFC and banking partners, there is a spread that we make in terms of our interest margin as well.
Since inception in mid-2020, Resha Mandi has been scaling at a scorching pace. Revenue jumped 20 times to over 400 crore rupees in FY22. The company is now guiding for a 5x jump over last year to close FY23 with nearly 2,000 crore rupees in revenue. This growth, the company says, has not come at all costs. That too at a time when sustainable growth is a top ask in the Indian startup ecosystem.
We had to be a conscious company on profits. And thankfully for us, this year, we've already converted to EBITDA positivity. We are tracking our PATs right now. We are trying to see if we can, in the Q1 of next year, turn towards PAT figures and get to profitability faster. We want to be a company which, once go out in the market, and when we are exploring IPO at some point in time, we want to be a company where the retail investors have a faith in our company. They understand that we are value conscious. They understand we are cost conscious. They are understanding that there is a growth, an immense growth.
Having begun with silk, Resha Mandi is expanding into more natural fiber categories. Cotton now forms nearly 30% of the overall revenue, while forays into jute and wool will be made keeping in mind the margin profile. Besides stepping into new categories, Resha Mandi is also stepping out of the country's borders, taking its India model to the Middle East, North Africa and Southeast Asia. The American and European markets will be the next stop in international expansion, which is going to be a key pillar of growth for the company.
Our plan is to focus on international, our private label expansion in domestic market, and expanding our financing and insurance offerings to most of our stakeholders. So I think these are the three growth pillars as we go along.
Textile manufacturing is a critical sector for India's manufacturing and export ambitions. However, a look at the Index for Industrial Production tells us that textile manufacturing is yet to hit pre-COVID levels. There has been a consistent decline since March 2022. There is also competition from China, Bangladesh, Vietnam and other Southeast Asian countries to contend with. However, the government says that it is committed to double annual textile exports from $45 billion currently to $100 billion in the next 5 years. Now that requires addressing challenges to make the textile industry efficient and integrated. On that front, startups such as Resha Mandi say that they can do their bit. With camera person Gaurav Tyagi, this is Akhil Vishwanath for CNBC-TV18.
All right, on that note, we're going to wrap up this edition of Startup Street from Shruti and Arundhati and me. It's a goodbye and thank you for watching. But stay with CNBC-TV18. The news and updates will continue on the other side.